I wanted to take a look at Tesla for you because this is just kind of blowing my indicators out of the water at the moment. I do see a trade setting up here, but I want to talk a little bit just about, wow, the move in Tesla. You can see this is our moving average indicator that I use, and look how steep this 50 moving average is. I mean, that is unreal. That one that steep. Of course, you're seeing the same thing, in the other moving averages. You probably did have a little bit of a buy signal right through here because that 50 was so strong, and you had some consolidation here, but I missed that one. But look at this move up here, the gaps and the move and the strength straight up. It's hard to find a good trade when you're looking at that. Take a look at the next chart we use, the wave indicator. Look at how steep the wave is. Again, hard to find a good trade when a wave is this steep. You could argue right here that we're in the oversold area. We're at a 52-week high. This is a sell candle, and if I were going to trade, I probably would be looking for a pullback down somewhere into this area because we're just way too far extended. The only thing that worries about Tesla is because it's such a volatile stock sometimes is how long it stayed in the oversold, the overbought range right here. That's a long time in the overbought, especially still showing upward strength. And look at how steep these waves are. And this current wave is even steeper than this one was. So certainly I don't think it can continue that forever. It's just hard to pick the point where it's going to pull back. Here are the Bollinger Bands. We're at a 3 deviation, 3 deviation, 3 deviation, 3 deviation. Didn't quite hit a 3 here, but it's just because the 3 had gotten so far extended because of how steep this move is. Even look at the candles here, the TTM indicator, the strength they showed in this move up. As I look at Tesla, certainly I would never go long up here. That just everything that's screaming to me, do not take a long here. It's just we're too far extended. If anything, I'd be looking at probably trying to short it back on a counter trend back down into this area here, or even the mean here. I don't know that I'd place a trade today. It's Friday. This is a good negative candle. I'd probably wait until Monday and see what it looks like when it opens. However, if it were to gap down, then you'd have to really look at that and try to decide whether or not you wanted to place that type of trade on a gap down. And I can't tell you that right now. I do believe that placing some sort of short trade here would be a good move, but after this move up, I'm going to wait and see. If toward the end of the day this candle holds out as red as it is, we're about halfway through the day, then I might change my mind and go ahead and place some sort of trade looking toward the downside. And we'll look just a minute at option prices because that's the next problem when you get stocks like this. It's really better with this much volatility. It's normally better to sell an option like a credit call spread or something. We'll look at a couple of those and just see what's out there right now if we did want to place a trade. And that might be the best trade out there at the moment, but let's look at them. All right, if we're going to sell something, I'd rather be a little bit closer in time, maybe 14 days out. We looked at the stock. It's trading at 402 right now. Let's see what would happen if we tried to sell a 402 vertical here. Let's see, 402, we do 407.50. What's how much we got? 221 would be our credit on a $5 risk. So that's really not too bad of a return. I like to see about a 250 to a 225, 250 range or more. We're not quite at 225, but that's still not too bad. And this may be one of the safer trades if you wanted to place it in Tesla. Let's take a look at if we went to the 405, see what that would look like if we sell a call credit spread. Put that in wrong. Let's try that one more time. So if we did the 405, 410, we could get that at 210. That's actually probably a little bit better trade, because we get a little bit. We're out of the money, so we're not starting in the money like we are here. Of course, look at how volatile this is. This has already jumped up to 275 and 215. So, if I could get this 405, 410, if I could get that around 225 to 250, I really like that trade. I would have to have about 250 if I did the 402. Let's look at a couple other trades to see how they would look if we decided to do something different. The other thing we could do is do a put call spread and let's see what that would look like. So we would want to look at what range. The danger with this trade is because if it falls down too much, we could actually lose money even though we're right. So we've got to really pick where we want that put to be. And as I look at this trade, I think I would probably around a 390. Let's see what we've got, what our choices are. 395. Yeah, let's look at the 395. Let's see if we buy a calendar here, a put calendar here. 395. That's just 1 week out, and it's $500. That's quite a bit. We can go a couple more weeks. That's $1,100. Yeah, that's pretty expensive. I'm not sure I feel that confident in that move for that price. I think if I were going to look at something, I would probably look at that call credit spread. I'm just running through a few more. You could put $495 in this put spread, and what you're banking on is that Tesla stays somewhat range bound. You're okay if it closes right through here, that it should still be a profitable trade. Obviously, if it closes closer to the actual price, we do $395. If it closes closer to the actual price, we'd be better in this $395 range, which is right here. If it were to shoot away from it, in other words, I would close this trade if we got over this, say, 415 probably. If we got over 415.25, I'd go ahead and close the trade for loss or gain, whatever I had. The problem we're going to have is if it pulls way back in the 370 or 380 range, then even though we've got the puts, we could still lose money because the intrinsic value on the short put that expires next Friday is going to be worth more than the time value and intrinsic value that we'll have on the other put, or it could be. The more into money it goes next week, even though we have the following week out there, it's going to hurt our calendar. And that's just one of the downfalls of the calendar. So as I look at this trade, I'd probably be leaning more toward the call credit spread at this point, and it's kind of you either win or you lose. I'd try to close it about half to 75% of the credit. I wouldn't try to get the full credit if I did place that trade. If you like this video, please like it. If you have any comments, let me know those. And just let me know what you think about this video, and I'll try to keep making more like it for you. Thanks.